Oh my God. We're live. Hi, Xan. Welcome to Venture with Grace.
Thank you. Thanks for having me.
You are literally, I was like at our dinner the other day, I feel like you're the most like exciting. Well, I shouldn't say this about other guests, but like I was like, I love chatting with every other guest, but I was like, I had the most like interesting conversation with you because I feel like you share such a interesting background, how you break into ventures from, starting your own fund with like two other people at Berkeley to, I feel like your journey in like Mongolia and like just like you have like the global experience. Maybe we could give the audience a little bit background of yourself. Like maybe we could start with like one core lessons that you've learned early on in your career, kind of shape you into who you are today.
Sure, thanks. So I think, brief background, originally from the UK, grew up in the UK and then spent 8 years in Asia before coming to the US and then transitioning into venture. Asia, I was in venture capital. I think, the key lesson I always think, which is just the simplest one, is just do what you say you're going to do, because I think a lot of people say a lot of stuff and then a lot of people just don't follow up or do anything with that stuff. So I think it's just pretty simple of just do what you say you're going to do. And so that kind of means you should also not say you're going to do too much as well.
True. Okay, let's talk about the newsletter and then we'll talk about Bubble. So you run this amazing newsletter in Berkeley and then you cover everything from like fundraising to all the startup movements. Maybe we could start with like, what was the journey of like creating that big like audience? And I'm super thankful that you also like partner with us to like help promote my event as well. And maybe we could start there because I feel like that's very impressive to gathering over like 5,000 Berkeley specific audience. And maybe we'll start there.
Sure. So I think that was like an example of just like, I thought there was a space in the market for this. I kind of spoke about it a little bit. And then eventually I kind of had to do it because no one else was going to do it. And so really, I think there's kind of two things here, which I think you're probably seeing on like LinkedIn and social media. I think like you've kind of got to build a direct audience now because the algorithms of social media will kind of continually change. And like that audience, I don't think needs to be big. It can just be like a very specific audience in a specific place. And so that was kind of the idea of this newsletter, where it's kind of like updating of all the funding rounds at Berkeley each week, which I think is kind of like a public service because I think it helps entrepreneurship. It really helps get people into the ecosystem. And I have a ton of people who reach out and be like, hey, I didn't know that Berkeley have raised like $50 billion this year. So it's a huge amount of capital, but no one really knows about it in that ecosystem. And so then I now just also have the funding rounds and also just random thoughts I have on the market or the kind of what's happening in Silicon Valley in general. Like if you look at this, last week, 6 companies raised $1.2 billion, which is just crazy, the amount of capital raised. And that's pretty standard. Like each week is kind of like a few hundred million to a few billion.
For sure. I wonder, okay, so how do you gather these information? Do you use like AI tools to help you build this?
Yeah, so I think the writing is all kind of me, because again, I think in this AI world, you've got to like try and have a voice. I think my spelling and grammar is not very good, so I have to use a little bit of AI for the grammar check. But the writing, I just kind of, it's just interesting stuff I see each week. But for the kind of the companies which are raising the money, that's a lot of AI. So there's like, it's ingesting a lot of the data from different data sources. A lot of people also send in companies now, and so there's a bit of a network effect there. And then there's also the AI who just does the formatting and all this stuff. So it is a bit of a labor of love, but I think it achieves a good purpose.
Do you kind of like build the tracker, or like do you feel like it's more of like you manually tracking these days?
No, there's a pretty built tracker. And then like obviously because like being in the market, I just see a lot of companies as well, which might not even have reported raising. So I always have kind of professors reaching out from Berkeley being like, I didn't know this company was a Berkeley company or whatever it is now.
Yeah, I didn't know like Cerebras was a Berkeley company until now. That's amazing.
Exactly.
Maybe we could start with like the bubble. So I'm about to launch like a mini bubble video today. Maybe we could talk about like your observations on the market.
Yeah, I think it's a pretty interesting time in the market. There's like a lot of abnormalities, I think you can kind of say, which is happening in terms of like the US stock market is at like record highs to percentage, like as a percentage of GDP. There is like most of the growth in the US now is nearly driven by like AI capex spending. And so like, I think you can argue that a lot of this capex spending and all of this stuff is going in and no one really knows what the outcome is yet. And I think the fact that no one really knows kind of shows that maybe like we might be in a bubble or we might not be, because it's like such an interesting time with all this money where it's like, it's kind of like the railroads or the telco build out. And at the moment, we're about 1.5% of GDP is AI capex. And that's kind of similar to the telco build out, but it's not even close to where the railroads got to. But I think like, I think you just got to look at it in different areas where, yes, this AI capex spending and in certain areas, it's definitely a little bubbly. And like a lot of that is like over exuberance and leverage. But what's happening now is like a ton of this capex is going into like infrastructure, which is going to be amazing, bubble or no bubble. There's the bubble is like kind of share prices where the money's all going. But all this infrastructure is going to have an amazing opportunity for anyone who's kind of building in that AI application layer where, the cost of tokens is going down. The ability to build products and host and all of this stuff is going down for people who are building companies. And so I think the bubble is like like every time you have a massive run up, there's always going to be a bubble. There's always going to be a bit of a blip. But I think reality is it's just super exciting with all of this capital going in to building capex. And I think so the bubble is a small area, but it's an area, but then really what's going to happen after that is going to be super exciting. And I think people are kind of like, AI, there's no real tangible benefit yet from AI. And I think that's rubbish. I think even if the models don't get better from now and you implement them, there is just a ton of productivity gains that can be had from the AI. And I think no one really fully knows what that's going to be yet. And so people are kind of like worried. And so, yeah, I think there'll be a pretty big pullback at some point. But I think the underlying changes what are happening now are just going to be so big that in a few years it will look less like a bubble.
For sure. I like speaking on the bubble. So today I just saw news of like OpenAI and NVIDIA strikes a $1 trillion deal. And so OpenAI has entered about like 1 trillion worth of infrastructure agreement this year, including 300 billion deal with Oracle for data center capacity and 22 billion contract with CoreWeave for NVIDIA GPU access. NVIDIA itself committed 100 billion investment in OpenAI, funding computer expansions under a broader initiative called Project Storage, partly backed by SoftBank. Maybe we could talk about that. Like, what do you think about like the new incumbent / OpenAI, Anthropic, all these like huge companies?
Yeah, I think it must be a pretty fun time to be like a business development or corporate development person at OpenAI at the moment. These guys are just going around making these like enormous number deals. But like these deals, I think when you like fully unpack them, a lot of them are just kind of contingent. They're over quite a few years. If OpenAI don't buy the GPU, stuff doesn't happen. It's like they did a deal with AMD recently where it's like if they buy, I think, $100 billion of GPUs from APU, the GPU equivalent of AMD, then, they'll get like a 10% warrant to AMD. So I think it's just like, for OpenAI, they're just trying to put themselves right at the center of the ecosystem so that they're kind of connected to every part of that ecosystem. But now they obviously need to prove revenue. They're at like a 20 billion run rate. They're growing extremely quickly, but to justify all of that capex spending, they've got to grow a ton of revenue. And I think the other thing I think is interesting is, OpenAI obviously have the models, Anthropic have the models, but then the application layer companies themselves now are like atomizing their model pipelines. And so like, if you look at a Cursor, I don't think they need to call OpenAI or Anthropic for every single call. And so they're making their own open source models at different parts of like a data pipeline. And so like not every request needs to go to OpenAI because these application layer companies like Cursor, Lovable, their margins are not that high at the moment on a gross margin level. And so they're looking at ways like, do we always need to go to OpenAI? Do we always need to go to Anthropic with our models? And so I think that's going to be pretty interesting on like how that plays out in like 10 years, because do you need to go to a frontier model for every call? I'm not sure over time. And so these application layer companies are kind of like, how do we kind of pull, how do we kind of do our own models to lower our costs and improve our gross margins? And so I don't know what that's going to mean for OpenAI, because they need to have like hundreds of billions of revenue to kind of hit all of these targets here. So I think that's going to be interesting to see how that develops over time.
For sure. I want to say hi to Matt. Hi, Matt. He said goes in. Okay, so another piece of experience is Apple launch M5 chip with 4x AI power boost. So Apple just unveiled M5 chip, delivers like over 4x the AI compute performance of M4. So like the chip has featured new neural accelerator in each GPU core. So like I'm not necessarily like the biggest like expert in the chip category. Like why are they launching new chips? And then like I feel like they probably launch new things every year through their iPhone, all these kind of different things, right? What does this mean?
Yeah, I think everyone is trying to optimize their like chips and models for, or like better, or like for Apple's case, they're trying to do it for like on device. And so, it's like, how do we deliver AI on the device better at a lower battery, at a lower cost in our thing? And so, this specifically is just one thing, but if you look at all the big players are developing their own chips. Amazon have their own chip with it, which is the Trainium. Google have their own chip as well. And so everyone's trying to build their own chip. OpenAI want their own chip, because I think people are kind of realizing, or realized a long time ago, that if you have that full stack of, like, if you look at a Google, for example, they're in such a good position because they have the full stack. They have their chip, they have the data center, they have the distribution, they have the data with like the Google Docs, and they also have the models. So like, I think they can serve these models at a much lower cost than other players. And so I think OpenAI and others are kind of looking at that as well in terms of like building their own chips out.
For sure. Another LinkedIn users have fantastic insights. I was wondering, so yesterday I was at Agentforce or / Dreamforce. I was in like a room of maybe I'll call it like 50 people with Mark Benioff and some of their amazing customers on stage. There are like all like I guess like Fortune 500 executives on stage, and one of the journalists asked Mark, what does he think about like these days like OpenAI is building their own agent, and like every company is building their own agent. Like, how do you think about like where Salesforce sit in that category? And Mark's response was, don't quote me, but like I feel like this is my takeaway was, everybody's building new models, but like the consumer don't want a model. They want people to solve their problem. So speaking of solving their problem, I feel like that kind of like highlights a bunch of different startup opportunities. I was also at the OpenAI Dev Day, and I feel like a lot of the things I'm seeing is like OpenAI is like replacing a bunch of different tools, replacing a lot of like I guess a lot of startups are in danger because like OpenAI is like launching a direct competitor, like a coding tool that's like removing all the things that they have built for like years, right? So how do you think about like where the startup opportunity sits in this very, I want to say violent, like tech ecosystem AI war?
Because it's an aggressive ecosystem. You've got OpenAI moving quickly. I think this kind of cycle, the incumbents are moving really quickly as well. I think in the cycle where it was like from on-prem to the cloud, incumbents moved slower because that was kind of like an infrastructure change. But I think even in this cycle, it's not just OpenAI who are moving quickly, it's Microsoft are moving quickly, Google are moving quickly. But then, what does that mean? Like OpenAI need to hit this massive valuation, they need to hit all this CapEx spending. So they're going to go after a ton of stuff. And, when they released the projections, they had like, I think they were projecting like 125 billion in a couple of years of revenue. And of that, like 25 billion was just product. And so like that is a ton of revenue. And so what does that mean? I think it means that, the very horizontal stuff will likely be hard because you are fighting with the OpenAIs of the world, the Anthropics of the world. But I think in the vertical specific areas, it becomes more interesting because, these models are good, but they are not, they have a lot of issues. They have a lot of hallucination issues. They have a lot of workflow issues. And so I think in the vertical space, I think initially the kind of promise of AI was like, hey, you're going to be able to have these models. They're going to come into verticals and they're going to be able to, solve everything. But I don't think that's happening. I think you still need implementation. You still kind of need custom builds for each use case within a vertical. Mm-hmm. And so I think the vertical companies who are able to do that and build on the use cases, which are extremely valuable for customers, are going to be pretty well positioned. And at the same time, just specifically in verticals, there's a lot of like network effects you can get by serving a vertical in a way. And so I think this vertical AI is going to have a great moment, but obviously a ton of these vertical AI companies are getting funded. But I think, that's on the vertical thing. But then I think if you go back to the valuations, a lot of those like valuations in the vertical companies are going up because, the bull case on that is like, hey, AI is going to move from being technology spend to people spend. And people spend is like 10 times the amount of of technology spend. And so if you believe that, you should believe these companies have got the potential to be 10 times more valuable. And that's why you're seeing in the market, in certain cases, you've got these companies which are like sub 5 million of revenue getting valued at like 500 million because people are believing that maybe, these companies are targeting people spend, not technology spend. I think that's going to be, the big question to be answered on the pricing. It's like, does that happen? And then I think the other thing there, which I'm still kind of thinking about, is like, okay, maybe you replace people spend, but then if every other AI company is also replacing people spend, what does that mean to like the cost? And I think, in this cycle, let's say you're being compared with people. And so you're like, hey, you're 10x cheaper than people. And that's great. I'll implement this AI solution. But what happens in the next, billing cycle? It's like, hey, I'm going to compare you to the other AI company. And so maybe there's a bit of a price change on what people can charge over time. But I think that's still to be uncovered.
For sure. Why don't we talk about the opportunities in these different spaces? Because you have invested in the healthcare space, the fintech space, and agent just like for financial crime. Like, so I wonder, how do you think about the opportunities in these vertical AI space, that like which one have more power? And also like, hi, Steven. Steven asked, like, how does small startups survive and differentiate ourselves?
Yeah, I think for small startups to survive and differentiate themselves, I think it's a couple of things. One is, creating like community and product love. I think if you look at a lot of these like super fast growing AI startups, they've actually been very good at creating communities. And so that's like within specific go-to-markets, and it's again interesting that a lot of these AI companies are now doing like cafes, they're doing like pop-up.
I was gonna say the same, like, because I mean, yes. Did you read the article from Balaji?
No.
He said exactly that. I will find the article. Like,
Perplexity did a coffee bus, and then Anthropic did a cafe, Cursor did a cafe, and so like I think people are realizing that you got to create community. You've also like, as a CEO of a company, if you look at the best CEOs of the AI companies, they're their kind of own brand. Do you know what I mean?
Yes.
Like, Sam Altman's a brand. The Perplexity CEO is a brand. He's always like in the market creating stuff. And so I think you've got to be focused on that brand. And then again, if you're a small startup, I just tackle the kind of customer problem and create as like magic of an experience as possible, because I think that can be better than these kind of big companies. And obviously try not to be caught up in all the noise, because I think there's a lot of noise and there's a lot of things which move so quickly that it's hard. You got to focus on what you're doing yourself.
Yeah, for sure. This was kind of like also said by Balaji's article. It's about like, nowadays, like the community or like the pop-up is like a new.
I know, it's so funny. It's
thing.
Good. Free coffee for everyone.
Free coffee for everyone, exactly. But I like, so one of the things that I don't understand for this. Oh, hi, Rodolph. So like I wanted to say hi to any audience who comments, but I wonder, so like for this, like what does this mean? Like I feel like, is this sustainable to like for each brand to have their own like cafe and stuff like that? And then for some of them, like I'm like, do they even need a cafe? Like what? Like I mean, how sustainable is it to like run these like pop-ups.
Yeah.
I guess they're pop-up for a reason.
But I think it's like one of the, with a lot of these like AI model companies, it's very easy to switch in between them.
Right.
I think in some ways, there's always like people say Anthropic code is better, then suddenly it's Codex is better. But like I think for that market, in the developer market, they just switch between whatever's cheaper, whatever's better. And so I think people are trying to kind of cut through that noise, and that like, again, more in this kind of AI world, I think in person is going to get more and more important, where everyone can write the perfect email, everyone can do the perfect presentation. It's not like it's like, hey, I want Grace to message me and tell me I should talk to that person and then meet them in person instead of just doing like an AI generated thing. So I think there is this like, as we get more AI first, the world will kind of shift a little bit more to in-person part.
For sure. What does this mean for like brands like ourselves? So like I feel like nowadays like every VC have a podcast, a newsletter, like everyone's doing 5 dinners a week, and like what does it mean to like actually create like authentic brand down the line? And then also just yesterday I was on TikTok, and then there was like a VC firm. I don't even know if they're actual VC firm. Shout out to them because their content's amazing.
Yeah.
It's like they're like skit after skit about like these VC jokes. But I never heard of like the firm before I entered TikTok.
What's the firm? Is it Redpoint or something else?
No. Redpoint's like legit. So like I'm not talking about they're not legit. I just never heard of them.
Yeah.
I don't want to name names because
throw shade.
No, I can't throw shade because I feel like their content is really good. I just never heard about like the firm itself. But I was like, their content's amazing. And then they're like their tagline is kind of like distribution is a new thing. But every VC firm currently is like very bullish on these like content creation. I feel like, Sequoia started the YouTube channel, like ACNZ has been there forever. And then every video is like very like professional YouTube grade. And like, how do you think about beyond creating content, like can people do anything else these days? Like what are the separation to like all these different firms?
Yeah, I think like, A16Z were very early in recognizing that content is like, part of what you need to do. And I think, as I say, like, it's kind of like an arms race of what, you've got to, you do like your thing is like multiple podcasts with people in tech, and then someone copies that. And so it's like, how do you, and like, sadly, I don't know if there's like a defensible content moat apart from like consistency, delivering what people want. And really doing that. And so like, and I think you just got to keep on changing as the world adopts, you know what I mean? Like where long form podcasts suddenly became very popular with things like Acquired, and they have like an amazing niche where they like look into companies and they do these 3-hour deep dives. But then suddenly like TBPN come out with the like quick takes, like more ESPN. Yeah. And so like, there's always space for new content and like old content in a new way. And so I think content is obviously pretty important, but then also it's kind of like, I think in the world where you can kind of get access to anything or any people, you've got to kind of focus on where you want to kind of land with value, either in person or whatever. But yeah, there's so many dinners, so many events, so many conferences. It's hard to differentiate.
Let's start with like Greenlight AI. So Greenlight is on our 100 list, and thanks to your nomination. And maybe we could talk about like how do you kind of like find the deal, and then how do you evaluate it, to diligence, to winning the deal, and then maybe eventually think about exit.
So this is just a small, we were a small part of this earlier this year, and I think this was an interesting one where we saw a lot of companies in the compliance space, and we do most of what we do is in fintech, financial services, and digital health. And so, this is this theory of like, hey, what areas of finance can be automated with AI? And I think, compliance is a really interesting one of like, okay, this is super people heavy. And I think people are approaching this in different ways, because I think when you break down compliance, there is kind of a couple of things, which is one thing is the data on people and like pulling in different data sources to understand if someone is like a politically exposed person or if someone should not be, added on. And so we looked at a lot of companies which are like aggregating different data sources to provide like a better data overlay to banks, for example. And I think we thought that's interesting, but at the same time, it becomes relatively commoditized because you're you're just like compiling like open source data. But I think where we liked Greenlight is they're actually targeting the kind of the people spend, where they're making the people within financial institutions more efficient by providing them ways to automate that like onboarding. And so I think that's where the AI is super, super interesting. So they target this level 1, level 2 compliance. And I think they've been super interesting. We did a lot of customer calls. You know, a lot of fintechs want to start with kind of small other fintechs, and then everyone wants to jump up to these large institutions. And I think Greenlight have been amazing at making that jump because, you know, they really understand it. Will was it Meta before this, doing a lot of compliance stuff, who's the CEO there. And so they've just been amazing at kind of making that jump from, you know, smaller startups to these kind of more large financial institutions. So I think that's a super interesting one.
For sure. Would you say your best companies are coming out of like warm intro, or do you have to hunt them down yourself after you build out like a thesis?
No, I think it's a mix. You know, I think a lot of companies, you know, this one, we kind of did a thesis, we went out and we found it. And then some come from like areas we already have theses in, but then we'll come through like a warm intro and then we jump on it. You know, I think we led a deal for a company called Savvy last year where we've looked at a ton of companies in that space, but we decided that Savvy was doing something different. And so what they are is they are a tech-enabled RIA. And like an RIA is like a wealth advisor. And so if you're a wealth advisor, you're basically managing money for kind of high net worth people. And so you're kind of telling them like, hey, Grace, you've got this money with me. I think you should have this much in stocks, this much in bonds. And we're in older generation of company called Future Advisor. And we looked at a lot of these like robo advisors, which are like taking out the person in this kind of chain. And actually Savvy are not taking out that person. They're providing better tools with AI for the advisors to properly manage their underlying clients. And so that's super interesting because it's basically allowing people to be humans and spend time with their clients, but automating their back office. And so this is like an industry where the traditional players are very slow, bad software. And then Savvy provide this kind of all-in-one like AI solution, basically saving it's like 20 hours a week for these advisors, which means they can go and do a ton of other stuff. And again, we spoke to a ton of these advisors and they were kind of like, you know, this solution is just magic because everything is kind of getting done for us in the back end. And then at the same time, that founder, Riddick, is, you know, he's a kind of what we call a super founder, where this is his third business. He sold one business to Box. He sold another business to Brex, where he launched a product at Brex, which hit like 100 million ARR. And this was his third business. And so, you know, he's someone who's done this before. We invested early last year. And you know, since then it's up. The revenues are up, I think, like 10x. They just did a round led by Industry Ventures, who invested about 50 million in the company, 72 in total. And so, you know, that's a company which is using AI to basically supercharge humans. And I think those are super interesting because that's hard to disrupt because you've got that human person relationship, and so it's hard to kind of compete with that because you're really delivering on that, but then at the same time you're using the AI to kind of supercharge you know, people's productivity.
I have two questions there. One is like for example, this person is like a second-time founder, and then they like not second-time but like serial founder,
Yeah.
and then they have like great access before. And for these type of deals, like how do you really get allocation for because they're like kind of like very hot in the market, like everyone loves like a second-time founder, and then their valuations typically higher too. So like how do you kind of like adjust based off these kind of like the market conditions / like, you know, how do you basically get into the round?
No, I think this is like, you know, this is not a specific Savvy thing, but I think in the question you asked is like, how do you get into like hot rounds if the founder is thing? I think, you know, at like the Series A and Series B, kind of where we invest, there's a lot of things which could have happened. And I think, you know, one of the things could be like, okay, maybe the company's slowed down their growth for a little bit. And so they've raised a seed, they raised maybe a lot of money at the seed, they've slowed down their growth for a little bit for whatever reason, because companies are never up and to the right. And there's always like a period. And so, you know, that's always a time where if you get in, maybe there's an opportunity because maybe growth has slowed down a little bit. There's also this, you know, I think in venture capital, a ton of people kind of have moved roles recently. So a lot of partners at firms have gone to start other firms or are, moved firms. And so then sometimes companies can become like orphaned, where the lead investor did the deal, but has now moved on or whatever it is. And so, those are interesting opportunities because the company is like an amazing company, but for whatever reason, it might not be like someone championing it to lead the round or kind of push it. And so I think there's that opportunity. And then I think, the market's still pretty like opaque in that, let's say for Savvy, when we invest in it, wealth management was viewed as not like a hot sector. Suddenly it's like a very hot sector. And so sometimes it's just like, okay, you have a thesis on a sector, people don't think the sector is too hot. It's like fintech maybe 2 years ago was like viewed as like a dead sector, but now suddenly it's super, super popular again. So I think there's like so many different ways in which this can happen. And, I think that's kind of the thing. And then I think, those are kind of the three different things. It's like maybe the sector is not hot, maybe the growth has slowed a little bit, but we'll kind of reaccelerate, or maybe there's like a situation around like the investors or whatever it is.
For sure. Also, shout out to LinkedIn user. We'll address your question in the end. I wonder, so for like a Savvy to exist, like there's like, as you mentioned, there's a lot of competitors, and for, I guess like for the fintech space in general, like what are, let's call it like 3 trends that you're seeing today? Because I was at the, so I spoke at the, I moderated a panel at iFly VC Summit in Texas, like in May. The founder of, the former CEO of Big Commerce was there. And then his opinion about fintech is like, he is bullish on healthcare, but really not bullish on fintech because he thinks like fintech is not a space that could be disrupted by AI easily because, you need accuracy. You can't just like play with people's money and stuff like that. So I wonder, what's your take on fintech and AI, like which subsegment that you feel like could be disrupted, and then what are the subsegment that wouldn't? I also on our show, we had founders that are innovating in the wealth management space, but it's more towards like using AI to predict like which stock to buy, or like we're using AI to like do this for you, and then you just need to like onboard a bunch of like money on our platform, and then this is like not just one, but like multiple companies in the space are doing this. Do you think this is a good use of people's time or like money, or like how do you think of that?
So a lot of questions there. Well, first, let's say what like fintech trends which are happening in terms of where I think definitely a lot of capital is going into compliance, because if you think about it, that is a thing which, yes, you need to be right, but you're not maybe touching the specific money. And so maybe the accuracy doesn't need to be like 99. It doesn't need to be 100% because people are not 100% accurate themselves. And so I think that kind of question of like AI and fintech, I think fintech is financial services is so broad that, the AI impact can start in one area and then move across to other areas as you kind of like, touch people's money. I think what we're definitely seeing a big change in payments, definitely cross-border payments with stablecoins. And I think a ton of these startups in stablecoins, which are stablecoin cross-border payments, are kind of growing extremely quickly. In that space, I'm kind of curious on like where the value will accrue, because I kind of think that these payments to an extent should be very cheap. And so, I think stablecoins as a rail is super interesting and is like an amazing like consumer value creation. But I wonder if there's going to be a ton of these, stablecoin cross-border payment companies in the long term, or whether that gets taken up by a few players. And there's a few players doing extremely well in that space, people like Air Wallets and Stripe. And then I think, thirdly, definitely this wealth management space is super interesting. And I say it's not just about the areas in which you're, directly touching people's money. There's just so many different things where you've got these industries which have been run for a long time manually or different ways. There's like a ton of stuff happening in tax where, maybe you need to get it exactly right. But if you're saving 50% of someone's time, that's a pretty big AI impact. So I think it's pretty hard to say that I'm not bullish on AI in financial services. I think using AI to predict the markets is like, I think if you can crack that, don't raise any money and just do it yourself and like have a great time, because I think if you can crack that, you cracked the magic code, and then you're kind of like you're kind of like a medallion fund, Jim Simons kind of style thing.
So you're saying number one is compliance, number two is stable coin across payment companies, and then what is the number three? AI predicting the market.
Oh, I know number three. I was saying number three in terms of areas where it's going to have a big impact. I think it's wealth management. I think like payments, as in number two, I wouldn't say I'm bullish on stable coins. I think payments in general has still got a lot of work to be done. And in terms of like, so maybe we'll call that like revenue cycle management would be maybe something in there.
Got it. I have my note taker broke down today, so I have to like manually take notes. Wait, I have a question on this. So like one is when you're thinking like the wealth management is like the third category, right? So like your thinking is like instead of like using AI to predict the outcome, that those people should be like C-strapping or strapping in general. And then the wealth management like innovation is in helping people more effectively.
It's like providing people the service. Yeah, it's providing people the service better, or like enabling the managers to better provide the service. I think that industry is very old fashioned maybe, and so I think there's a ton of innovation that can happen across, whether it's like onboarding, whether it's all these different things. There's a ton of things which can be made better.
Does the money flow in that industry? Because like, I mean, I feel like wealth management, whenever you think about it, it's kind of like, oh, this guy who like sit at Chase and like, tell me I should buy this 5 stock. Like, how does the industry work? And is there a lot of money actually going to the wealth manager? I know it's like, they're taking like what, 1% of like the transaction or like 3%?
No, so like typically, there's trillions of dollars in wealth management and the fee structure will differ, but typically it's around like 0.5 to 1% of the assets under management. And like really the cost of that is to provide you with like advice around your wealth, whether that's like taxes, whether that's like advising you where to invest, whether it's like setting up your portfolio. And so that's like the value. And I think a lot of the value is like, you, Grace, are like, hey, I'm going to put my money in the stock market. And if you lose it, you're going to feel bad. But if you give your money to a wealth manager and he loses it or she loses it, you're going to be like, that was just unlucky, which is like a different mentality. You'll blame yourself if you do it yourself, maybe. And it's just like a human nature thing. And so I think there's a lot of areas within that space which can be tackled.
I guess like for that, like, so I guess like another question I had was like for the compliance space, like, do you mean security technologies or?
Well, I think there's, the compliance can be broken down into a lot of things, can't it? So like there can be compliance where, we're an investor in a company called Skyflow, and they do something super interesting, which is, PII, data vaults. And so what that is like PII is personally identifiable information. And so let's say you're a customer of like Walmart, you have your name, Grace, in there. And so, they are Walmart. And so like your data's in there, your like name, your phone number, all this stuff. And so, that's just within the company. And the company needs to keep your data secure. And so like, and your data is kind of moving around the company. It's kind of going into different models and all this stuff. And so what these guys do is they create a vault for your data, and then they will anonymize like your email address, but will let it move around the company, if that makes sense. And so it means that you're stopping this like leakage of like extremely personal data out of a company. And so that's super interesting in this world of like AI, where you can question a model and be like, tell me Grace's birthday. And if that data is within the model, it will probably tell you. But with a solution like this, it won't tell you anything because it will be like anonymized and it will be tracked. So that's like that's kind of like a compliance adjacent, where like this is kind of a mix of cybersecurity and the compliance, where you're really kind of protecting someone's data and stopping any kind of leakage. And so that way your data is encrypted, and is like held in and is like always secure. And so that's huge for massive enterprises, because if you're in financial services or healthcare, in healthcare, if your data leaks, it's like a massive fine per data leakage. And so companies really need to do this in this kind of world. And so that's like, when you ask the question on the kind of like looking after the data, that's like a specific example. But like in like a case of when we go back to Greenlight, yes, the data needs to be secure, but really what they're doing is looking at like the onboarding flow and like automating that. So it might just be, and they could in theory do that using like they could do that using like anonymized data in a way, but so there's different ways in which it all happens in the stack.
For sure. Maybe I guess like the other part is one of my thought on like, so for example, let's say fintech or these kind of like security compliance company, like how do you kind of like do your own market mapping, or like how do you compare them? Like, so what is your internal kind of like memo look like? Obviously you don't have to like show us, but like I guess like how do you put together your own thought into some sort of like effective framework to evaluate deals? Because I think sometimes like retaining information and then actually like making sure that you have like a full picture is very hard. Like how do you kind of like, I guess like
that's where I think if that's kind of like, I guess the question is like, what is like, how do you build a thesis? And I think is pretty important. And I think what we kind of start with is like what is the particular challenge in the today's workflows, and what is the real pain point? And so that's this idea of like the customer's pain point. And then you've got to be like, okay, assess like the product market fit of the solution. And then it's like, is this a product? Is this a feature? Is this a company? Because I think there's a lot of things out there which are potential features at the moment, especially with AI, stuff which will be done. And then it's like, who is the buyer of this solution? And like, how much can they pay for that solution? And how much with what they pay will change over time? As in like, because obviously it's better to invest in a company which has higher ACVs generally. And so it's like, will that change over time? And then also like, how much of a priority is this for the company? Because every company has a lot of different priorities. And so it's like, okay, is compliance a big priority for a company? Typically, yes, if you're a bank. And so typically that means they can pay a lot for it. And so it's like, okay, is this a priority? And then it's kind of like, what is the go-to-market of the company in the space? Is it like, are they targeting the right people? Is that go-to-market, in healthcare, a lot of the go-to-market can take a very long time. And so you really need to understand the go-to-market to kind of buy the contract. And then we think like, does this business have any network effects at scale? And what does that mean? That means like, does every product that business deliver make the product better for every other user? And so we look at these things, and then really we overlay that with what is the team, why this team? And so that's kind of this idea of like the product. Is this the right product? And then I think it's like a big question is like the why now? Like, has anything changed? Has there been like a macro trend which we believe in? Is there a new technology or business model evolution that allows this solution to work and have a moment to become massive? And so we kind of like looking at these kind of three areas of like pain point, the product and the product market fit, and then it's kind of the why now. And so when you kind of pull all of those things together, you can then look at different companies in the space. You can talk to different companies in the space, and you can be like, okay, because there can be like three companies with basically the same product, but they have different go-to-markets and very different like ACVs they charge the customer. And so you've got to like, you can just look at it and be like, which go-to-market do we believe in, and why this product, and the why now? And so those are kind of like the way, we build a thesis and really look into like deciding on what companies to invest in.
For sure. So like, since you also work closely with Rebecca, who is like our former guest, like, and then she is on the Midas list for multiple times, like, what were some kind of like lessons that you've learned from the mentorship or like kind of like working relationship?
So Rebecca says hi. No, she's great. She's been, very well, amazing investor. She was an early investor in companies like Lending Club, Doximity. And so she, her track record is amazing. And I think, with her, she's got like a super deep understanding of technology trends. They were an early investor in Siri, kind of an original AI solution. I think if I was looking down on one specific lesson, I think where she really excels is she's very clear and like good at delivering feedback to founders, and in a way where like you're not burning bridges. Because I think a lot of people on these boards will just be like, there for the ride. And I think she's always thinking like, what is best for the company and what is the best advice that I can give in like a clear and direct way. And so I think she's amazing at being direct. I think she also has like a superpower in this kind of go-to-market where, where we believe that we're trying to invest in the inflection point of a company's go-to-market. And so we really think that we can help a company, improve or change their go-to-market if they have to. And I think she's amazing at understanding the customer. And so that's what the ethos of the firm is. We spend a ton of time speaking to customers and potential customers of companies we're going to invest in, and even our current companies, because we really want to understand that customer. So yeah, there's a ton of lessons I learn from her daily, but that's some of them.
I love that. I wonder, so like, since like some of our audience question is, when does the content generation stop providing value for the funds, and then their interests are just
good question. It's a good question.
Yeah.
Yeah, I think that's like, I think that's fair. And I think basically people will just stop listening if people don't like it. I think it's a fair question. And I think it's like, definitely there'll be a lot of noise out there. But I think the fact that people are listening probably provides some value somewhere. And I think it's good because, an investment into a company is a very long-term relationship. And so if you're a founder, you kind of want to understand a little bit more about the people you're going to work with. And so I think content, even if it's not valuable to a lot of people, if it's specifically valuable to one person for creating a relationship over a 10-year period, then it's probably useful. And so I think a lot of content is not useful to many people. But if it's useful to just one person, and that person is someone you're going to have a relationship with for 10 years, then I think it has a purpose.
I also feel like content is such a good way to like get to know people. So like, for example, let's say like I'm driving to a meeting with Xan. I'm going to pitch him about my fintech startup. Yeah. And I probably should like understand a little bit more about like where he's coming from and like what's his like opinion about life is. I would walk into like a party or something, and then people will come and tell me that they were trying to get a job at a certain VC fund, and then they listen to our podcast to like get all the answers right to like the partners. And I was like, that's so funny. But like, it's true, right? Like, so like you kind of like want to make sure that like you kind of get to know someone before you meet them, so that you make the most out of the meeting, whether it's like pitching an investor or like, pitching like the fund manager, or just like making a friend, right? I think it's better to like know something about someone than like just going in code. But one of the other audience, Stephen asked, how do we prepare geopolitics impact in the market and wealth management so much, especially using AI?
Yeah, I think that is a pretty broad question on like, I think if we look at geopolitics, I think the world is definitely changing in geopolitically. I think this moving towards this bipolar world, where there are multiple superpowers in the world. And I think they have competing agendas. And I think especially if you look at AI, I believe that there's something which is like a deglobalization of data, where data used to flow kind of freely everywhere in a way. But now you've got like the EU, all these places are kind of like saying, hey, our data cannot leave the data centers within the EU or whatever it is. And so there's that trend where data is becoming more localized and more viewed as an important asset to companies. And then at the same time, you've got all of these sovereign nations deciding that AI, is critical to their, geopolitical security. And so you're having, as you see here, you're having like a lot of countries being like, hey, we need to have our own sovereign AI. So you've got in the Middle East, a ton of massive data centers are getting built to kind of create their own models. In Europe, you're getting, Mistral is getting funding from European companies and getting support from governments, because Europe is like, hey, we need our own AI solution, because if AI is as powerful as everyone thinks it can be, we don't want it in control by too many actors. And so, certain actors, I mean. And so I think there's this massive trend of, data is becoming deglobalized, AI, that everyone wants to have their own AI solution. And so there are, these geopolitical, touch points out there. And so hopefully they don't boil over. And obviously they've boiled over a few times recently and continue to boil over, but hopefully they don't boil over in such a massive way over time.
I saw it was like really interesting because like I think President of Cisco was on our podcast before and he was speaking at our conference, and I think I saw a picture of like him and Sam Altman and like a lot of these like big tech leader going to the Saudi government, and like what does that even entail? Like, so is there like a partnership there, or like, I mean, obviously there is a partnership there, but I'm sure, but like, I guess like, what does that mean for like the tech community? And so as you were saying, like, people are building their own, like each country is building their own like sensitive AI proprietary model and companies, and like, how does the money is gonna flow into the US or flow out of the US? Like how is that kind of like changing
Well, I think for like the OpenAI case, as we said, they've got a lot of commitments to buy a lot of compute, and so they need people with very deep pockets. And I think in the Middle East there is a lot of capital, and that capital wants to diversify away from oil revenues and oil in the future. And so that's like a great partnership of like, hey, we've got a ton of money, you've got a way to spend that money, you can spend some of that money with us, you can spend some of that money in America. And so that's like probably the genesis of that partnership. Mm-hmm. But I think more broadly, just looking at this AI CapEx, so much of it is in the US. So I think the US is really taking a big swing to invest in the next generation of CapEx. And I think compared to the rest of the world, that's much higher. Obviously, a lot's happening in China as well. But I think at the same time, a lot of money needs to flow into people's own AI infrastructure. And that's kind of what's happening in the Middle East and in different parts of the world.
For sure. I want to be mindful of the time. Maybe we'll wrap with a quick 1 minute fire round.
Sure.
What's your favorite book?
Oh, there's a book called Any Human Heart, which is just a story of like someone's life randomly progressing through different events in the world. And it's just an interesting, fun book, which just follows someone like, stumbling into global events, which I've always just enjoyed as like, just live the life and see where it takes you.
Love that. Who made the biggest impact in your career?
That's an interesting one. I think probably, the first boss I had out in Asia, a guy called Tom Holland, who was an amazing mentor in terms of, he gave me a lot of responsibility very young. I was kind of straight out of university. I was sent to do like a leveraged buyout in Mongolia and was just given the ability to go and do it by myself. And so I think he was amazing in giving responsibility and ability to fail and make mistakes early on. So he was a great mentor.
Who would you invite to your dinner party?
Oh, that's an interesting one. I think like I love like historical fiction and history in general. Actually, not fiction. I like fiction grounded in historical events. And so it'd probably be someone, I think like Julius Caesar or one of these like Roman generals. I quite like the Duke of Wellington, although I think he wouldn't be that fun at an event. So maybe like Julius Caesar or like Napoleon Bonaparte, just to see one of these people up close.
Love that. Where can we find you outside of work?
I got a 10-month-old son, and so most of the time just playing with him. Very small little guy. Other than that, love hiking and traveling, and just charging around the Bay Area.
Love that. Well, Xan, thank you so much for coming to the show today. It was such a fun conversation as usual. You're awesome.
Thanks, Grace. You're amazing.
Thank you. Let me quickly end stream.